Going on traders, welcome back to my YouTube channel. I hope you're doing well. And of course, I hope you have a fantastic weekend. It's been a really good week in the market, some really strong moves that we've been able to take advantage of. But what we're going to be doing today is going over 11 pairs just to see what we could potentially look for moving into next week. I hope you enjoy the video. And if you do, make sure that you give us a like, subscribe if you're new to the channel, turn on notifications. And without further ado, let's get on with the show. So traders, we're going to be going over 11 pairs today, just to see what's happening in the markets, to see if there's potential trading ideas that we can conjure up for next week. Now, we've had some really good movement in the market, and I did say this last Sunday, we do expect some really big moves, obviously because of what's happening in the world at the moment. And I do expect this to continue. So it's not a bad thing for us traders. Again, my thoughts and prayers go out to those that are in Ukraine, and we do hope that this gets resolved as soon as possible. So the first pair that we'll take a look at, traders, is pound USD. Now we can see that the overall sentiment in the market has been bearish, and it's been bearish for quite some time. You know, we hit some highs over here, and you can see that price didn't break it. Once we started to take out some of these consolidations and these major lows, ever since then, we've just continued bearish. Now, you'll see a similar formation to what we've seen previously to the upside here, where price has just been failing again to make new highs around 34.19. With that being said, what we're looking for is a continuation to the downside. And once we start to respect structures that are previously formed, I did speak about this last week, we have a breakout and break back in. This is where the level was initially created, the gap down that was then filled, and then now we have a level that's respected, and we've had this sharp movement. Now, it's these drops that you want to be getting into, and when they're going to develop, we don't know. But you've got to just be in a position where you're looking to take trades from major key levels, looking for those break and retests on intraday timeframes, or looking for price to break out and then look for those continuations. So now looking at the market, we have just broken a very important low here, around 33.02. And what we've been expecting the market to do, just naturally in line with a downtrend, is come back to this key level in anticipation of a continuation back to the downside. Now, I like this level because it's around a 50% retracement of this current leg here. You can see that this is the level where price held and broke. And if we come back to this level around 33.02, then we start to create that formation of that new lower low, lower high formation in anticipation of a continuation down. Now, just to make sure that you're very aware, we do not need to be worried about buys until price starts to break above this structure here. Now, from an intraday perspective, you will see that this is the lower high that was formed in this formation here. And this is the area in the market where price created the new low. So even though we have this retest level here around 33.02 on the 4H time frame, we could still have a deep pullback into some of these major levels here. So just be very wary of that. Price doesn't necessarily need to respect the previous retest level after it's broken. And as long as price trades below 33.46, we can still look for sales from this level. If we start to break it, then we can start to anticipate a reversal in the market. But I don't think that's going to happen at this stage. We can see that the money's in the dollar right now. And you'll see that across the board as we go through the market. So that's my idea on pound USD moving into next week. A nice pullback retest after this strong push phase, and then look for that potential continuation back to the downside. The next pair that we'll take a look at is EURUSD. Again, we're identifying really strong USD strength here. You can see that the overall sentiment of the market has continued to push bearish, and some really beautiful moves that have happened this week. I hope you was able to take advantage of them. So let's isolate an area in the market where price created that lower high, that created a new low here, and anticipate what we can start to be looking for. Now, currently we're in a strong push phase, so we do want to expect price to pull back, or we do expect price to pull back to create that sort of lower high formation as part of a downtrend to then anticipate that continuation back to the downside. Now, this is a key level in the market that price needs to trade around 11.38. So if we start to see that confluence across the board with pound USD and EURUSD pulling back deeper than we anticipate, we just make sure that we look for that area around 11.38. And as long as price trades below it, we can still look for sales if given the evidence. Now we want to look for some intraday levels for potential trading opportunities. And one of the areas that I can isolate here is around, let's mark this up, 10.49. Now, the reason why I say this is because once we scale down to our intraday timeframes, you'll see that this was an area in the market where price failed to break as the previous structural low we created this tiny pullback and the breakout. Now, once we broke below this level here, you can see price held, and this is an area in the market we'd like to look for that 50% retracement to see if price can pull back to retests, similar to what we've seen on pound USD. So I'll be looking for that 50% retracement around this area to look for that really nice clean retest and that continuation to the downside. At the moment, there's not much else to be looking for, as we are in a very strong push phase. We do anticipate a pullback before a continuation, as you do in a downtrend. So that's what we'll be waiting for. Now, we could go into some advanced analysis here, looking for intraday breakouts, but we'll keep it simple for the majority that watch these setups and outlooks each week. And we'll say this will be our main focus moving into the second week in March. The next pair that we'll take a look at is pound JPY. Now, what you'll see with pound USD is an identifier mark of dollar strength. We also do identify that the pound is weak. Then we can anticipate that pound JPY will also follow suit. Now, again, some really beautiful trades that could have been taken this week, and I really do hope we was able to take advantage of them. Really nice, strong green candles, really nice, strong red candles. And these are the kind of market conditions you want to be trading. Once you identify that momentum shift and that, volume in the market, then that's the time that you want to start looking for trading opportunities. So we've just broken below this major level here around 52.80. Now, I don't personally like this as a retest level in the market because I feel like price consolidated here more than anything else. And what we know about consolidations is if price is trapped between an area where it's not moving to the upside or to the downside, and then we finally get that breakout, then that's where we know the orders are potentially sitting. We're never going to be able to guarantee that. And I don't want to, pretend that, that kind of information exists. And that's why we call ourselves technical traders. But what I do know is that if orders have sat here before previously to move the market to the upside, and then we was able to break through this area with very strong momentum, there's a very high chance that the cheaper price to sell this market again is going to be in and around this area. So I personally am going to be waiting for price to pull back to this level here to look for that retest and that continuation around 53.19. And I think this is the easiest play that we can be looking for moving into next week. Again, I'll make it clear the pound is showing signs of weakness and yen is also showing signs of strength. And that's to be expected with investors investing in the dollar and in the yen and in gold during these crises, if that's a word. So this is my plan with pound JPY. The next pair that we'll take a look at is gold. Now, as I said, we do anticipate price to continue bullish. We did have a really messy start to the week with gold. You can see that the market just moved sideways. It was very tough to trade at the beginning. And then as you can see here, once we broke out of this area in the market with a strong bullish close, we've just continued to push to the upside. The most important area in this market is an area where we expect price to react from. As you can see here, price did react from this level, but eventually we did break above it. So we had that wick rejection. Now that we've had that break above this level, what I want to see price do just for a period of time is just leave and then come back to this level for that simple retest and potential continuation based on the structure that when the market is trending to the upside, we make higher highs and higher lows. Now, I'm not going to say that this is the perfect retest in this formation. We can also pull back deeper into this market structure before the continuation up. And what you'll be looking for if that happens is the area in the market where price broke out of that consolidation, which is around here. So yeah, around where I've just marked up. So this will be what we call a deep pullback into a previous level of resistance or support in this instance. And we'll be looking for then that continuation up. The reason why we anticipate this, traders, is because once we're in a very strong push phase, we have to always anticipate a pullback. Now, going into the weekend, we do expect some gaps, either to the upside or to the downside, and you can expect those to be corrected more often than not. But what we do want to do when trading is making sure we're identifying repeatable patterns, and those repeatable patterns being a higher low formation in an uptrend, and then anticipate that continuation. So this is the two plans that I'll be looking for moving into next week on gold. The next pair that we'll take a look at is USDCAD. Now, you can see here in USDCAD, the dollar has been showing signs of strength. We have this really strong movement to the upside where prices continue bullish. Now, with what we're seeing here now, prices come into this major level in the market where we failed to break above. With structures like this, they're pretty easy to trade because we know after a push phase, we have an exhaustion. And what we're going to be looking for is for price to come back again to an area of consolidation to look for that retest and then that continuation back up to 27.92. We'll have a second plan on this, but let's just again highlight what we're looking at here. When the market has been moving sideways for a long period of time, and then you finally have that breakout and close like we saw with pound JPY, you then look for that continuation to the upside. So let's just highlight that again. Last time, pound JPY, 30-minute time frame, we have an area where the price is moving sideways. Once we have that breakout either to the high or the low, we anticipate a continuation higher. And then when we get down to USDCAD, finally, you can see here again, we have a consolidation. Once we have that breakout of that high, we anticipate that continuation higher. So with that being said, 2690 is the level that we want to be looking for that potential pullback, higher low retest, and then continuation. And then the second plan, as I mentioned just before we got confused there, is that if price doesn't pull back to around 26.90, we simply just wait for the break of 27.92 in anticipation of a continuation back to the highs. What we're relying on here at this stage is dollar to continue showing signs of strength, investors investing in the dollar and seeing USD-CAD continuing higher. So that's the plan with USD-CAD. Next pair we'll take a look at is New Zealand dollar JPY. Now, we do expect the yen to be stronger, to be honest with you, due to the simple fact that we're identifying on pound JPY that the market conditions are going down. That could also strengthen our analysis, identifying pound weakness. So at this stage, I think with the fact that we have a little bit of a conflict in terms of our analysis here, I'm going to scratch trade in New Zealand dollar JPY until things clear up and I can identify a currency strength or weakness that will support why I should be buying or why I should be selling. As you can see, for the majority of last week, the markets have just been leaving crazy wicks behind, which means that there's not enough volume in this market, in my personal opinion, to be confident to take high probability trading setups. We could be identifying New Zealand dollar strength here. We haven't got any confluences to add to that. And if the dollar is strong, then when we look at New Zealand dollar USD, we should see that market conditions go down. If New Zealand dollar is showing signs that dollar is not holding the strength against the New Zealand dollar and it's pushing bullish, then we can say that we could be looking for buys because of New Zealand dollar strength. But I don't really want to battle the markets right now when I am seeing yen strength, and I don't really want to be trading New Zealand dollar when I know I could be trading pound weakness. So let's move on to our next pair. So New Zealand dollar, as I said here, look, before we even looked at it, we can see that New Zealand dollar is very strong. Okay. Now, if you buy New Zealand dollar, it means you're backing against the fact that the dollar is showing an immense amount of strength across the sentiment of the market. Personally, I don't like it. I don't want to encourage you to trade it. If you trade New Zealand dollar USD and New Zealand dollar JPY, kudos to you, because I really don't like trading New Zealand dollar. I prefer to trade the majors like pound, USD, euro, yen, and gold. That's my personal preference. But if you are trading New Zealand dollar, I will just say New Zealand dollar is showing a lot of strength. So if you're looking to back against, let's say, pound New Zealand dollar, knowing that pound is weak, you could be looking for some high probability trading setups. But I think trading New Zealand dollar versus a dollar and versus the yen could find yourself in a little bit of a pickle. In actual fact, let's take a look at that on pound New Zealand dollar. Based on our simple analysis here, we should be identifying a very sell-buy structure on New Zealand dollar, New Zealand dollar. We should be seeing a very strong sell-buy structure here. Let's take a look at this. Yeah, there you go. That is how simple trading can be. Ample opportunities here to be looking for selling opportunities. Pound weakness, the New Zealand dollar strength, New Zealand stronger versus the yen, yen showing signs of strength across the board, USD showing signs of immense strength across the board, but New Zealand dollar staying stronger. Then you just simply say, well, we have the weakest pound versus the strongest currency at this stage, which is New Zealand dollar. You come over here, you look for your trading opportunities, and it's pretty easy to trade. I mean, this is the simplest way to trade. You don't need anything else. And now let's take a look at euro yen. So as I said, we are seeing signs of yen strength, right? That's why I don't want to trade New Zealand dollar JPY. With that being said, what I'm looking for here, because I know investors are investing in the yen, I'm going to be looking for price to fall back to some sort of 50% retracements and then look for that continuation. Now, I fell short of coming back to this key level because the 50% retracement is around here. So what I will do is I'll isolate the intraday level, which is the level where price creates the most wick rejections. Once you scale down to a lower time frame, you'll see here now this is the area in the market where price failed to break. Once we finally got through this level, that's when we fell. So that's the 50% retracement that I'm going to be using here to look for those retests and those continuations. And I don't think there's anything more to say about euro yen at this stage. Next pair we'll take a look at is CADJPY. Again, traders, the power of trading simple currency strength and weakness, identifying structures and correlations, understanding the sentiment of the market, simple price action, and look at this yen strength. You could have been selling this all last week. Absolutely gorgeous. Now, that being said, we're only looking for price to continue bearish as price has pushed very strong into a major key level here in the market where we failed to break. A simple plan of action with this is just to eventually wait for price to break this level. Once we break this level, then what we'll anticipate is a continuation bearish back to some of these key levels here in the market. And all I'll say on this one is Bob is your uncle. Now, because we're in a strong push phase, you do have to anticipate a pullback at this stage. So again, we'll isolate the area in the market where price created that intraday support level. Once we broke through that level, we could either tidy this up a little bit. And once we finally broke through that level, that's when we fell. Simple trading, simple breakout, simple close, and then looking for those continuations. So this will be the pullback area I'm looking for in the market for the continuation back down to 90.03. And then I'll just mark this level to know what I'm looking for moving into next week. These are all plans you could be using, but I just want to say that these are of my own opinion. These are not facts. This may not happen. The market could totally reverse on you. So please trade with caution. I just want to let you know this is not financial advice. The next pair that we'll take a look at is Aussie dollar USD. Again, traders, look, we've identified that the dollar is strong, and we can now see that Aussie dollar is showing signs of strength as well. What we have to do at this stage is we have to make an informed decision. Do I really want to go against the fact that we know the sentiment of the market is illustrating USD strength, or do we prefer just to stay out? And in my humble opinion, it's probably best to stay out, especially trading against the dollar and especially trading Aussie dollar against the yen. What you can be doing is you can be going to, let's say, I've done it again, pound Aussie dollar. Now, the reason why we're going to go to pound Aussie dollar is because we've identified here that the dollar is strong, yen is strong, versus the Aussie dollar is showing signs of weakness, meaning that if we take the weakest pair, which is pound, and we put it against the Aussie dollar, in theory, this market condition should just be selling off like nobody's business. There you go, traders. Simple trading. Simple trading. Aussie dollar holding up against the pound. Sorry, Aussie dollar holding up against the dollar, showing signs of strength when dollar is strong. We take the weakest currency, which is the pound. We trade it against the Aussie dollar, and we have a very simple trading opportunities. Very simple. Oof, it's too gorgeous. Okay, we have our analysis not on JPY. Now, you can see here, traders, that the market has been consolidating. I just want to make sure that you really identify that this is what has been happening. I know we've had a lot more volume with the yen than we have with the dollar. That might be the reason why New Zealand dollar is pushing stronger and why Aussie dollar is pushing stronger against the dollar, because maybe it's not as strong as we think. Maybe the pound is just really weak or the euro is very strong. But what we can see here that the price has been trapped within a consolidation. You must make sure that you understand this. When you go to the daily time frame, you'll see that the price is just moving sideways for a period of time. Not that I use it, but I just want to make that very clear. So I will say here in this instance, when you have a strong dollar and a strong yen, it's better not to trade it because you will find that the markets are just going to consolidate. But if the market starts to break out of some of the major highs, so let's remove this, some of the major highs and some of the major lows, then this will give you a trend indication of where you could be looking to trade. Right now, personally, if the yen is going to continue to show more signs of strength than the dollar, I'm looking for the break of 114.56, or if price starts to break above the structural highs around 115.82, then I'll be looking for buying opportunities. Now, I just want to say you can buy from 114.56 if given the evidence, and you can sell from 115.82 if given the evidence, because we are trapped in a range. But I'm just going to say this. You know that the pound is very weak and you know that the yen is very strong. Don't trade the yen versus the dollar when the dollar is strong as well. Find something that you can trade that will make more sense, like trading pound JPY. And as we've seen, we've had a really strong movement to the downside. Or look for something else that will strengthen the currency that you want to trade and weaken the currency that you know is weak, giving you a very clear directional bias of where you need to be trading. That's my analysis here on USDJPY. We've looked at USDCAD, we've looked at New Zealand dollar USD, New Zealand dollar JPY, pound USD, pound JPY, Euro USD, Euro yen, CADJPY, Aussie dollar USD, gold, and USDJPY. So we've done the 11 pairs. That is my analysis on the markets this week, traders. What are we seeing? We're seeing strong yen. We're seeing strong dollar. We're seeing weak pound. Now, I just want to make this very clear, even as a disclaimer, to be honest with you, the market sentiment can change overnight, literally. That's why I'm a price action trader, because what the candles tell me is what I trade. Now, I don't necessarily need price to come back to retest levels in the market because I'm an intraday trader. I can trade just a movement back to the upside or a movement back to the downside. But the key takeaway here is if you want to trade like that, the most important thing that you need to be able to identify is how to understand currency strength and weakness, identifying structures, key levels, and the overall sentiment in the market. It's pretty simple. It sounds like a lot, but if you practice it, you watch my videos enough, you'll see how to do it. Anyway, I hope you've enjoyed this. And if you have, I will ask again, please hit that like button for me. It does a lot for the channel. Subscribe if you're new, and welcome. Turn on notifications for when I next post, which is 3 times a week, Tuesday, Thursday, and Saturday. And as I always say, continue to trust the process.